Hi, everyone, and welcome to this edition of our Coffee with Innovate Finance podcast series. I'm Janine Hirt, CEO of Innovate Finance, and I'm delighted to have with me today Steve Elliot, Managing Director of LexisNexis Risk Solutions in UK and Ireland. Steve, thanks so much for joining us.
No problem, man. Thank you for this opportunity to talk about what we're up to.
Yeah, really excited. I know our ecosystem is quite excited to hear from you as well. Now, you joined as members of Innovate Finance in the last year, and we're really delighted to have you on board. Why did you join the Innovate Finance community, and why is it so important for LexisNexis Risk Solutions to be a part of the fintech ecosystem?
Well, we joined for a number of reasons. First of all, it's really important for us all to progress, to be part of a community. Competition is healthy, but actually working together in order to make sure that we deliver strong benefit to society is also critical. And we believe that we can provide more benefit by sharing more insight, understanding more of the problems and supporting more firms, and therefore being part of a community actually allows us to do this. So we joined because it's an exciting opportunity, I think, to deliver real value to the society around the UK.
And I'd love to hear a little bit more, Steve, around the specific role you play in the fintech and the financial innovation sector. So, for example, what services do you offer fintechs? What problems are you solving for them? And how are you doing it differently from your peers?
Well, that's a great question, but it's a very big question as well. And the answer could be a long one. So what do? Well, we operate in a number of different areas. We operate in financial crime compliance. We operate in fraud and identity, in credit risk decisioning, and in customer data management. And each one of those has different problems that we're helping society to solve. So if I pick them off just quickly, financial crime compliance, understanding sanctions, implementing and complying with sanctions is complex and increasingly complex given some of the turmoil that we're seeing across Ukraine at the moment. And we help firms to understand truly who they're doing business with. So what is the risk of money laundering? Are entities, are individuals on sanctions lists? And that is a complex thing to do. Just to give you an idea of how complex it is, our recent survey revealed that the UK businesses are spending as much as £26 billion at the moment, ensuring that they comply with the various financial crime regulations that exist. So very complex, and yet money laundering still occurs. Sanctions breaching still occurs. So we help firms to actually solve those problems. And then fraud and identity. How do you know who someone really is? Fraud is on the rise. ID fraud is on the rise. Firms need to authenticate people fast in order for them to move through their supply chains, to get access to services quickly. So we help firms authenticate people and drive out the risk, understand the risk of fraud and close the opportunity for fraudsters. And credit risk decisioning, where we go as well. People's credit profiles are disrupted because of a whole range of things I could go into. A lot of people in the UK are financially excluded, and I can give you numbers on that. But we help firms to authenticate and risk rate people using a whole range of differentiated assets, data assets, so that people can get access to financial services. So very short answer to some very big questions there, but we help solve some of those problems.
And 26 billion, and that's a massive number that you've quoted there. I'm curious, from your perspective, what can organizations do to better protect themselves and their customers against the increasing risks of fraud and financial crime?
Well, a real challenge for firms. If you go to money laundering and sanctions, so the FCC part of that problem, firms must comply with regulations. They have regulatory obligations that must be met. So they're spending a lot of time, effort, money in ensuring that they can evidence to regulators that they have complied with the regulations. Are they truly effective at fighting financial crime? Well, that's a different question. But we see the volume of money laundering and the value of money laundering through the UK economy continuing to grow. So there must be better ways of actually deploying some of the capital in order to fight financial crime, to fight money launderers more effectively. And there are solutions to that. If I kind of touch on those in relation to fraud and identity, so slightly less regulated, but firms must nevertheless ensure that they prevent fraud. They mitigate fraud. Otherwise, the cost to them and to consumers is considerable. But there they get a bit more freedom in terms of how they do it. And they can deploy a whole range of differentiated data assets to truly understand who people are and what risk they pose. Now, we can help because we understand people's physical attributes, who they are, where they live, their date of birth, and all the usual physical attributes you're used to. We also understand the digital profile, what email addresses they're using, what devices they're using. And then the critical bit is how all that connects. So what is the network that surrounds an individual by their physical attributes, their device attributes, and so on. And we can see how that network changes. Now, it's that network that truly shows you whether something is risky or not risky. And by deploying similar techniques, by understanding that the network, we can help drive out money laundering and fraud, and we can authenticate people quickly. So the answer lies in really strong data assets that are linked together really effectively. And the power of computer processing now allows us to do that.
And we're living in such unprecedented times. And I know we've had a chat about this in the past as well, but how did COVID-19 impact yourselves on the client side? So were there certain trends that you observed amongst your clients within financial services and fintech?
Well, absolutely. We saw a number of different changes. So if I start with the firms themselves and how they organize themselves, firms had to move out of the office environment very quickly. They had to move to a work from home environment quickly. And that impacted all firms across the markets. But firms wanted to authenticate their customers fast. They wanted to risk rate them fast. They wanted to help provide the service they needed to continue providing. So it meant firms had to change their organizational processes. They had to become digitally more efficient. They had to find new ways of servicing the customers. And they did. They responded fast. And that was, I think, a real positive for the UK economy because it forced firms to jump forward a few years and provide much more effective, much more digitally led organizational arrangements. But it also impacted consumers. Consumers had their credit profiles disrupted. Consumers had the financial strain that's the inevitable consequence of firms struggling to operate. So if they want to get access to financial services, mortgages, credit cards, if they want access to utility bills, and all the other entertainment services that they tend to get on credit at the moment, those firms need a new way of assessing the consumer's credit profile. And that changed. And also fraud changed. Fraudsters take every opportunity they can to commit fraud. They see change as being a new opportunity for them, and fraudsters absolutely targeted the markets aggressively to take the opportunity to enrich themselves. They were opening bank accounts, they were getting debt facilities, they were taking government support scheme funds as actively as they could in order to enrich themselves. But that created a real challenge for organizations. How do you differentiate the fraudster from the genuine customer when everyone's profile has been disrupted? And there again, we can provide real benefit because the answer lies in getting access to more data assets, understanding the network in more detail, and authenticating in new and faster, more credible ways.
Great. Are there any case studies, specific ones that you might be able to share with us?
Well, absolutely. There are lots of case studies across the different use cases that I've just talked through. But if I go to credit risk, that's an area that really fascinates us because at the moment, a huge number of people in the UK are financially excluded. They're unable to get access to the markets because of their credit profiles, or when they do get access, it costs them more than it should. So we spend a lot of time looking at financial inclusion and finding ways to help firms do business with consumers with greater trust and certainty, and then to allow them to price more effectively. So what does that actually mean in terms of use case? So we're looking at using differentiated assets to risk rate people in new ways. And we are finding we're giving double-digit uplift to firms who are able to accept customers now that previously would not have been accepted, or to accept them at lower risk levels because they are more certain of the true risk that that individual poses. So using, again, those big differentiated assets, using analytics on top of the differentiated assets to work out what we should look at, what firms need to look at in order to predict particular outcomes, like, for example, default. We can provide double-digit uplift that allow firms to authenticate and accept more people.
Amazing. So it is a really interesting then to think about how essentially the right data and the right analytics can be put in place to help people get back on their feet as well and support there.
That's exactly it. I mean, who are we? I spend a lot of time looking at who are we? What are we as people? Are you your name and address? Are you your name, address, your date of birth, or those plus your educational certificates, plus your job, plus your income? What are you? And actually, when we dig into that, who we are is made up of a huge array of attributes. We could have two people exactly the same, that do the same job, live on the same street, with the same name even, and with similar backgrounds, but actually they could have very different ethical compasses or moral compasses. One could be very determined to do the right thing all the time by the right firm. The other could be determined to go commit fraud or to commit money laundering. And looking at the wrong set of attributes wouldn't tell you that difference. So looking at more attributes and looking at the network around the individual and the organizations and showing how those evolve over time gives you far more certainty about the true nature of the individual, the risk they pose, and allows you as well to authenticate them far, far faster.
So further on this theme that we're talking about here, looking at data, looking at individual, looking at privacy as well, are there any policy and regulatory trends that you're seeing right now which will have a massive impact on financial services going forward, or on this conversation, this area we're discussing as well?
Well, there's always change taking place in the regulatory markets, but most of it could be managed. I think we could look back a few years. We could look at GDPR, for example. That drove a lot of change. I think personally that was a positive change. Having been in industry for many years, as a money laundering reporting officer, as a leader in operations and in compliance, I struggled for years with the multiple records relating to individual customers and inadequate data for those individuals. Now, GDPR forced firms to tidy their records up, and that was a real positive. Beyond that, actually, we've got regulatory change around some of the compliance obligations, particularly coming out of Brexit. So there is change coming, but I think the change today is manageable and can deliver actually much better outcomes for consumers.
And Steve, there's so much change happening in the world today. We talked a little bit about COVID, the geopolitical issues as well, and the cost of compliance is also rising. Do you have any advice for fintechs in this very challenging operating environment to stay competitive?
Well, that's a fascinating one as well. And we see the fintech market's changing fast too. A lot of the fintechs are driven by venture capital funding or large investment funds that are helping them to gain access to the market. Building the technology is exciting, and it provides technical capability that allows solutions to be delivered, but those are weak without the data that they rely on. How do you stay competitive? Well, you stay competitive by combining the technology with the data and focusing on particular market problems. And again, you asked about problems at the start. When we look at how we're innovating for the future, we focus very much on problems. What is the problem we're going to solve? Some years ago, we looked at ideas and exciting things that we could do, but that's the wrong way to look at it. If you look at ideas, we can have endless ideas that excite us, but they might not solve anything that really needs solving. So how do you solve it? You look at clearly defined problems in specific sectors. You then have the data assets and the technology that blend together in order to solve that particular problem. So focus on problems, use more data, build more with more technology, and we'll solve some of these problems.
I love that. That's some very good advice, Steve. So finally, are there any other exciting updates from LexisNexis that you can share with us today?
Oh, we've always got great updates here, and sometimes the marketing people tell me to share less of it, but actually some incredible stuff. And one area we didn't go to was around customer data management. So exciting for me and hopefully exciting for others, but part of the solution that we're providing, or one of the solutions we're providing through all of that, is just allowing firms to consolidate their data assets. No longer is it necessary for firms to have 5, 10, 15 disconnected records for consumers. Using these much bigger data assets and these enriched network profiles for people, we can actually consolidate all those records together. Now that provides, again, more cost-effective, efficient savings activity for firms to execute on. They can deliver their solutions at a lower cost and more effectively because they can understand their consumers better. And they can understand them once instead of having lots of different profiles. And they can keep them dynamically updated. We can see changes to people's profiles in real time, and we can help firms enrich them as well. So not only is it possible to actually close the window on fraudsters to make it more difficult for them, not only is it possible to provide people with more access to financial services in a more credible and risk-controlled way, but it's now possible to consolidate consumer assets together more effectively so that we can reduce the cost to firms of actually running their businesses. So I think we're in a really exciting time, and I think there's plenty of opportunity in the market.
So watch this space. Steve, thank you so much for joining us, and really great conversation. And listeners, thank you so much for joining in to this Coffee with Innovate Finance session. Please stay tuned for our next session. In the meantime, visit us on LinkedIn or Twitter, on our website at www.innovatefinance.com. Until next time, stay safe, stay well. Thanks so much.